Warm greetings and good day to everyone. On behalf of the Indian Embassy in Dublin, I welcome all of you to join our series of lectures, India Ireland Friendship Lecture Series, which covers various topics across the sectors for enhancing bilateral understanding between two friendly countries. Started with the inspiration and motivation from Ambassador of India, His Excellency Sri Akhilesh Mishra ji. This series has received overwhelming response from the audience. To grace another such episode, which is related to the field of sustainability, we have with us Mr. Mehul Pandya, Managing Director and Group CEO, Care Ratings Limited. Associated with CareEdge since 2000, Mr. Mehul Pandya is Managing Director and Group CEO of CareEdge. Over the years, Mr. Mehul Pandya has successfully incubated and nurtured the company's business in India and abroad. He is a member of the board of directors for all subsidiaries of CareEdge, while also being the vice chairman of the Association of Credit Rating Agencies in Asia, ACRAA. He also serves on the board of Association of Indian Ratings Agencies, AIRA, and contributes towards US-India trade promotion by virtue of his position on the board of US IIC. A technocrat with the management background, Mr. Pandya is also a CFA charter holder from CFA Institute, USA. Over the years, he has attended various leadership programs at IIMA and the High Potential Leadership Program at Harvard Business School. Prior to joining CareEdge, he worked with a state level financial institution in Gujarat for almost 4 years and was instrumental in setting up an in house credit rating cell for the screening of lending proposals. He has worked as a consultant for the Asian Development Bank and conducted various training programs on credit risk analysis in India and abroad as well. Without further ado, let's start the event, and for that, I would request Ambassador of India, His Excellency Sri Akhilesh Mishra ji, to give away his introductory remarks.
Namaskar. My very warm greetings to all friends connected with this program. Let me begin by thanking my dear colleague Rugraj, my Deputy Head of Mission, and Mr. Vitek, who is supporting us from technical angle. I'm very grateful to Mehulji for your kind gesture to accept our invitation at a very short notice. This program is very significant for us because we are looking at diversifying and broadening India-Ireland connect. And as you know, India and Ireland have had a very long-standing ties of friendship. And also in the contemporary times, I see a lot of interesting synergies and complementarities. India is the fifth largest economy and poised to become third largest economy very soon. India is the fastest growing major economy, the fastest growing G20 economy, with huge innovation going on, huge demographic dividend and creativity, entrepreneurship at the grassroots level that we see through startups and incubators and accelerators at the grassroots level. Same way, Ireland I see is a 5 million strong population, but that is a deceptive notion about Ireland. It is the fastest growing economy in European Union and second highest per capita income in terms of per capita GDP. Also, it has a very robust manufacturing base with annual exports of over 220 billion euros of goods and over 110 billion euros of services trade. So it's a very vibrant economy. And if you look at the sectoral strengths, then we both have a lot of commonalities. IT or pharma and medtech, agriculture, fintech, higher education is one big area which I see we have interesting opportunities to work together. And the theme of today's lecture, ESG, is particularly important for a country like India because India has a very high population density in terms of per square kilometers land mass. The density of population is extremely high, which makes our country particularly vulnerable to different kinds of shocks and climate change issues. So it is a very high national priority for us to be more innovative. We cannot simply grow by copying the American or European or Chinese model of industrialization and growth, because that would be devastating for us also. Second aspect is that given India's size and scale, it does matter to the rest of the world what innovation we adopt to reduce our carbon footprint and make our development more resilient and sustainable. So, in absolute pure self-interest, as well as in the broader interest of the planet as a whole, as our Prime Minister reminds us, Vasudhaiva Kutumbakam. So from both angles, it is very critical for us to think innovatively, think creatively, to maximize local products, maximize sustainable solutions. And the second aspect is, as a diplomat, I'm always looking at opportunities for international collaboration, international linkage. So in the field of ESG, I see very significant opportunities in two domains. One is Ireland itself is doing very cutting edge work in ESG sector, making the very holistic planning in its economy, different sectors is one area. Ireland, is a mega production house for cutting edge IT related products, pharmaceutical products. It's a mega center for data centers for many multinational companies. It has about 1,900 multinational companies based in Ireland. So agriculture sector, farming, meat industry is very prominent. Aviation, Ireland is a world leader. 60% of world's leasing of aircraft is processed from Ireland. So at the business level, there is a massive churning going on centered around ESG. Also, equally important is the work that is being done in the Irish universities. That they are coming up with very fine, very practical and action-oriented curriculum to promote, nurture the human resource development for ESG awareness, and also the technical competence in the youth to take up the responsibilities in different industries. So on both fronts, I see there is a lot of opportunity for Indian professionals and Irish professionals to work together at the B2B level, also at the capacity building level. Third area is Ireland has a small population, so domestic production of graduates and professionals is limited compared to the demand of the rapidly growing economy, particularly in the MNC sector. So in terms of opportunity for India to supply highly qualified, competent professionals who are well versed in modern ways of thinking and solutions in the ESG segment. So, Mehul ji, you are an insider, you are a player, you are such a multifaceted genius. I'm very delighted to have this opportunity to interact with you and learn from your wisdom. Based on that, I think we can take up also the next step. How do we make further B2B ground level connections? Once again, very warm welcome, Mehul. Thank you so much for joining.
Thank you.
Thank you, sir. May I now request Mr. Mehul Pandya, Managing Director and Group CEO, Credit Ratings Limited, to give his presentation on the topic Sustainable Growth through a Nuanced Approach on Credit and ESG Ratings. Please.
With your permission, Your Excellency, I will share my presentation. First and foremost, very good morning to all of you. I'm indeed privileged to be a part of this interaction. And for this, I must begin with my gratitude to His Excellency, the Ambassador, Shri Akhilesh Mishra ji. It has been an interesting phenomenon for the last many years that we have been witnessing. And I'm quite sure, since I've been following you on the various posts, it's abundantly clear that, sir, with your vision and understanding of the various facets of the economic growth of the countries, not only what you're representing, that means India, but also where you have been stationed as a part of your illustrious career, a deep understanding of those economies. And that gets clearly emanated in the form of how you perceive, how you visualize, how you conceptualize the various aspects of the integration, cooperation, and fostering the friendship between the nations wherever you have been serving. So, sir, when I was contemplating about this interaction, few things came to my mind. All along, globally, the key dimensions which come to the fore are revolving around number one, growth. All economies, all nations want to grow. There's no surprise to that. The roadmap for growth is something which is clearly demarcating the fast-growing economies versus the others. And when I'm mentioning about the roadmap, it's just not the case of what the intrinsic, can say, the drivers for the GDP growth of the economy are, but it is also ingrained very clearly in the vision which is getting articulated by the governments across the globe. So with this mindset and with this landscape in my mind, I thought that growth, if it is the theme, in that case, it is abundantly clear and abundantly important for us to understand that how sustainable the growth shall be from a futuristic perspective. Having said that, sir, it is also important to understand that credit rating, in the parlance of the financial landscape of any country, is a very central aspect. It's a small industry as compared to the mega industry, core industries worldwide. It's a small industry. But the fact that it has an abundant power to influence growth makes it a prerequisite as far as the importance which is given by the policymakers is concerned. So I thought about this aspect. On one hand, we have growth. Second hand, we have how to have a sustainable growth. The third pillar of this interaction is how valuable or how intrinsic the key aspect of rating is. And the fourth pillar, sir, is ESG aspects. So I'll try to deliberate on each of these things and share my views on this. I'll touch base briefly on our journey as a pure homegrown rating agency in India with more than 3 decades of experience. I'll touch base the key aspect of the importance of the credit rating agencies in the market. I'll touch base on credit rating, both in terms of the core credit rating as well as sovereign rating importance. And lastly, I shall be delving slightly deeper into the sustainability assessments and why they are important from a sustainable growth perspective. Something about CARE Ratings Limited. Incorporated in 1993, last year we completed 30 years of our successful operations. In fact, to celebrate that, we had series of events across the country, and we were honored with the presence of illustrious personalities, including the honorable ministers, Gadkari ji and Piyush Goyal ji. Right. So that's in the overall landscape of the global rating industry. There are not many rating agencies who would be having more than 3 decades of experience. This is a company with diverse shareholding. We have completed almost like close to 95,000 ratings now since inception. As is applicable and as is expected from a rating agency having such a long experience, we have multi-layered rating process. We have significant experience on rating of the sub-sovereigns and now venturing into the sovereign. I'll be referring to that in slightly greater detail in the subsequent slides. Since we are talking about sustainable growth and ESG aspects, it is important for me to point out that as a rating agency operating over here, we have the leadership positions in the renewable and the infrastructure sectors. We are a listed company with almost like $380+ million of market cap and rated $2.5 trillion of debt over a period of time. While we are currently operating in India and Africa, we have our global footprints, which I'd just like to share with you. Starting on the far left, we have provided technical assistance to 2 Latin American rating agencies. We have a subsidiary in Mauritius, which looks after our African operations. We have recently established a step-down subsidiary in South Africa. We hold a license in Kenya. And in our African subsidiary Mauritius, we have African Development Bank as one of the key stakeholders. We have recently signed an MOU with the African Peer Review Mechanism, which is an arm of the African Union for setting up a pan-African rating agency and a central regulatory body over there. We have a shareholding in a rating agency in Malaysia. We had business collaboration with a Japanese rating agency known as JCR. And importantly, we have incorporated a subsidiary in the IFSC GIFT City, which shall now be venturing into the sovereign and the global scale ratings of the debt securities. As I mentioned to you, it's a fairly dispersed shareholding that we have. And at the group structure, we have 5 subsidiaries and a step-down subsidiary. And out of the 5 subsidiaries, 3 are rating subsidiaries. And if I add the step-down subsidiary also, and then that makes it 4. And the non-rating subsidiary is into the analytics and the advisory business. I mentioned to you about our leadership position in the renewables and the infrastructure sector. This is an independent directors dominated board. We don't have an identified promoter, which makes us completely independent in that sense. And we have privilege of having board members from across the spectrum and with experience both from the government policy making side, from the regulators side, from the private sector, as well as the public sector undertakings. We take pride in the fact that we are a young organization. We also take pride in the fact that we have a good gender diversity ratio and a very strong female representation as far as the workforce, as well as in the senior leadership, and at a total strength at a group level in excess of 740. Let me just take a moment of yours on mentioning about Africa. It's important in the overall context of the things because continents like Asia and Africa, they are facing a lot of challenges when we talk about the growth as well as sustainable growth both. And why rating also is important in that sense. We started off in Africa through our Mauritian venture back in 2015. At that time, there were no rated debt over there. But over a period of time, now the rated debt is in excess of $3 billion. A significant coverage across the spectrum. This is how the markets they get developed. Of course, as a commercial venture, we have been profit-making and dividend-paying subsidiary, and also the fact that it's able to take care of all its expansion plans for the future. But more importantly, also, we have just not stayed at the level of offering credit rating only. We have also ventured into providing the ESG assessments, which is very important in this. A rating agency's role is just not in terms of providing the fillip to the capital market, but we see that as an overall developmental objective, it should be transcending into the spheres which are very core as far as the growth of the economy is concerned. And that's where we have gone ahead and offered the ESG services also over there. I mentioned to you about our recent MOU with the African Peer Review Mechanism. This is the first of its kind globally. And why I'm mentioning about this is the fact that in the continent from where you are operating currently, sir, a lot of investors and a lot of investment is oriented towards Africa. And one of the predicaments of a continent like Africa is also that how they could be having an access to the adequate capital. And that's where rating also comes into the picture. And that's where our joining hands with the African Union, I take pride in the fact that during the presidency of India in G20, with the vision of the Honorable Prime Minister, we had African Union joining G20 as a permanent member. And the fact that we are joining hands with them for the establishment of the first of its kind globally, a Pan-African rating agency and a regulatory body, makes it more important in the context of the sustainable growth that we are going to discuss. This is important from the perspective of the market development initiatives which rating agencies they are supposed to take, as also the fact that the key difference between one rating agency vis-a-vis the others is also that in which areas these developmental objectives they have been met. Small and medium enterprises form one of the biggest chunk and importance for the growth of the economy is concerned. And over here, we've been quite active. I mentioned to you about Africa. Some statistics on this: 14 times growth in the debt issuances since the time that we have started operating, and $3 billion of debt from something which was not existent at all. It's become a long way with the establishment of rating agency in these countries. Talking in the context of India, from the ESG perspective, we have a proprietary platform which we call as Sirius, SIRIUS, which covers more than 1,000 listed companies in the country and has a dissected assessment of the various corporates from all the three pillars of ESG: environmental, social, and the governance angle. And let me say that this platform is customizable across the geographies. Let me just give you a perspective of something which I was highlighting as far as the role of a rating agency is concerned. So, and friends, a typical characteristic kind of a financial landscape of any country could be visualized in this fashion. There is a policymaker, and here we are talking about the Ministry of Finance or the Treasury, as could be called in various geographies. There is judiciary, there are tribunals, and then there are regulators. There is a capital market regulator, there is a banking regulator, there is a pension fund regulator, there is an insurance regulator. This is how the ecosystem surrounding banking and the capital markets, they tend to develop across the countries. So the issues like the large corporates, the small and medium enterprises, the public sector undertakings, the banks, the non-banking financial companies, the insurance companies, they get benefited with this kind of an ecosystem, and so does the investors as well. And once again, this across the strata, institutional as well as the retail investors, they tend to get the benefit of the operations of a rating agency in the overall financial landscape of a country. What does a rating agency in that sense does? Let me take a moment of yours to elaborate on this. Rating agencies play a role in the global financial system, as I mentioned to you. The key aspects that we are discussing pertains to assessing the creditworthiness of the corporates, the sovereigns, that means the countries, the sub-sovereigns, which will make the urban local bodies, which will also be taking care of the various state governments or the provinces across the globe. The nomenclatures could be different. But the fundamental aspect of the operation of rating agency could be elaborated in the form of an independent assessment, which helps the informed decision making by the market participants. It promotes an efficient market because of the fact that the rating agencies transparently disclose the assessments to the public by the various press releases and the methodologies which are used as part of the assessment. And since all the risk factors which go into the assessment are factored into the ratings, it is a comprehensive assessment which gets disclosed. Of course, there is a market development objective aligned to this, as I alluded to in the previous slides. And importantly, it enhances or elevates the access to capital for all the deserving corporates and the other stakeholders in the market. Globally, the rating agencies, they are regulated by the capital market regulator or the banking regulator, and that differs from geography to geography. In our case, in India, say for example, both the capital market regulator and the banking regulator, they look at the various facets pertaining to the listed securities and the bank debt, respectively. We mentioned about the capital markets. I'm just giving you a glimpse in terms of how the capital market and principally the debt market in India is. Over a period of time, the growth of the capital market, the bond market in the country, has seen significant development over the past few decades. The key aspects are, as India strives to deepen its capital markets and reduce dependency on the bank financing, the bond market has emerged as a crucial avenue for raising the long-term capital and, very importantly, for driving the infrastructure projects, because they need a lot of financing with the long gestation period involved. The bond market becomes very important. But as we can see, despite the growth, if we really look at it, the corporate bond market in the country, I would still put it at a nascent stage with around close to 22% of the total outstanding bonds. It is largely dominated by the government sector. So from this, we believe that India's rapid economic growth and the ambitious infrastructure development plans have created substantial demand for the long-term financing, and the bonds, they provide an attractive funding source for these projects. We firmly believe that inclusion in the global bond indices shall be a big turning point for the future growth of the capital markets in India, principally the bond market. The key facets for that, this inclusion is expected to attract significant investments into the Indian bonds. We believe that the index tracking managers may allocate significant chunk to India, boosting the capital inflows. Over the next 18 to 24 months, this can potentially result into an inflow of approximately $20 to $40 billion, which is significant for the economic growth. It also has the potential of stabilizing or even strengthening the currency. A strong currency can indeed provide economic stability and help boost the trade positions. The overall impact could also be in terms of the lower borrowing costs, and principally for the government bonds. And we believe that the potential improvement in the sovereign rating of the country, and deservedly so, could be leading to the favorable borrowing terms for the government and the corporates. India's introduction of the fully accessible route program and the market reforms has paved the way for the inclusion in the bond indices. We believe that the corporate capex is likely to get energized from the second half of the current financial year, and that would indeed mean access to the bond markets, and resultantly, we expect the bond markets in India to get more vibrant and deepen. Let's just take a step forward. Now that we have the perspective of the role of the rating agency in the country, we have the perspective of how central ratings become for an economic growth. Let's now look at some aspects pertaining to sustainability and how these core things they get integrated into the basic credit risk assessment. As you can see, and here we are trying to segregate into the various facets how ESG parameters they get into different aspects of a credit risk assessment framework to get a better understanding. ESG factors have increasingly become integral to the credit risk assessment by the rating agencies. It provides an insight to the issuer's long-term sustainability, resilience to risks, and the governance practices. We assess environmental factors such as climate change and resource scarcity, the impact on the issuer's operations and the financial stability. We also evaluate risks related to the physical impacts, such as extreme weather events. We just witnessed Hurricane Beryl in US. So many climate change impacts we've been witnessing across the countries. We also assess the transition risks, which means that how the regulatory changes in any country would be impacting the carbon-intensive industries. Some key aspects from an environment perspective, rating agencies, they consider an issuer's compliance with the environmental regulations and its preparedness for the future regulatory changes which could be in the offing related to the standards of environmental control. The corporates that demonstrate on a consistent basis the efficient use of the resources, the adoption of renewable energy, and sustainable practices might receive favorable ESG scores from the rating agencies. On the social aspect, some of the parameters, it could be in the form of the labor practices, the community relations, product safety, and the overall social impact that we tend to assess from a social risk assessment angle. Turning now on the governance side, which is a very fundamental and a very important pillar of the credit risk assessment. The governance structure of an issuer, its board independence, the composition of the overall boards, the diversity, the expertise, all these aspects are evaluated. Strong governance practices ensure a very effective oversight and strategic decision making for any corporate. We also tend to evaluate various scenarios of how different components of ESG risks, including the climate related risks, could be impacting the creditworthiness and the debt servicing capability of an issuer over the period of time and definitely over the tenure of the instrument. This becomes very important in the overall sense of the risk assessment framework. And this is how it ultimately flows to the final assignment of a formal credit rating symbol to an issuer. Let me just turn the focus now on sovereign ratings and why sovereign ratings are important. So, sovereign ratings are crucial for the countries for several reasons. They have the power to directly impact their ability to access the global capital flow, as also borrowing at favorable terms and manage the fiscal policies effectively with the combination of this. Over a period of time, sovereign ratings have become the critical benchmarks that influence a country's economic prospect, financial stability, and access to the global capital markets. They serve as the indicator of credit risk and are a vital component for the governments in managing their fiscal policies and attracting the investments. A question may arise that there are global rating agencies who have been active in this space since a long time. Why is there a need for a sovereign rating agency from the emerging markets? We believe, if I were to just take an example of our country, India, we are firmly on the path of becoming the third largest economy for the next few years. It is imperative that we become truly independent and capable in controlling the capital flows as well, without being dependent on anybody else. The improved access to global capital is something where sovereign ratings could be having a significant impact. Foreign capital is generally available at cheaper rates when compared to the domestic capital. The various vehicles which the government could be using or tapping could be in the form of bonds, sovereign bonds, green bonds, sustainability-linked bonds, and this could be used as investment in key sectors such as infrastructure, where a significant focus has been manufacturing and even technology. The foreign capital facilitates access to the international markets. It helps the countries to expand their exports, diversify their economies, and integrate very effectively into the global value chains. One of the key components is also the municipal bonds. Admittedly, India has a long way to go for developing the municipal bond market, but certainly, with the proper credit rating exercise, we believe that we could be giving a lot of fillip to this initiative. The corporates in the country, and that for that matter in various emerging economies, could be raising the foreign currency using the services of the various rating agencies globally. But they potentially could be having an alternative in a short time. Another key aspect of the importance of a sovereign rating agency coming from an emerging economy is also a nuanced rating approach for the emerging economies. I'll just give some aspects of that. I'll not delve very deep into the sovereign rating methodology in the subsequent slides, but I'll just be touch basing on some key differentiators that we have tried to bring about of our assessments. And of course, sustainability would be a key to that. Another important aspect is the development of the capital markets with the strong support from Government of India and the vision. The IFSC GIFT City in Gandhinagar, Gujarat has been developing fast, and that ecosystem is something which could be helping not only India but the adjacent economies as well. Some aspects, how the various facets could play out. The infrastructure investment by Government of India, that in itself is visualized at $4.5 trillion. So the capital formation, transition, and the domestic funding of the government debt, they all become important. And from that perspective, a sovereign rating agency from an emerging economy like India could be a game changer for the global capital flow. Let's also have a look at Asia and Africa. The challenges which Asia has been facing, which houses more than half of the world's population and experiencing rapid urbanization and economic growth, but it's facing formidable challenges in the infrastructure development, which gets exacerbated by the climate change aspects. Addressing these challenges requires substantial investment in the resilient infrastructure and the climate adaptation measure. Here comes the paradigm of, on one hand, you'll have to have a growth, on the second hand, you'll have to have a sustainable growth. And at the same time, these economies, they indeed require, it's all good in concept to have sustainable growth, but at the end of the day, you also need to have the adequate capital to promote this growth, which makes it a challenging but an interesting dimension of addressing. So from that perspective, we believe that on the infrastructure side, some statistics which you are mentioning based on some ADB report, that straining the existing infrastructure and services across the economies in Asia is something which needs to be addressed. So investments are required in transportation, in housing, water supply, sanitation, and all this to accommodate the rapid urban expansion which is happening. And all this, they need to be done in a sustainable fashion. At the same time, we also see a disparity in the income distribution, which also necessitates a kind of an equitable approach which is required for promoting a sustainable growth. At the same time, once again, it leads to the predicament of how to access adequate capital to fund all these things. We believe a sovereign rating agency with a nuanced approach could be a solution to this. There could be objective methodologies, there could be clearly defined ESG and the SDG categorization, support to the domestic financial markets, leading to the proper access to the capital, and ultimately catalyzing the investment flow, principally leading to the various aspects of the infrastructure growth in this Asian economies, is something which could be getting a lot of fillip by a sovereign rating agency. As in case of Asia, there is a capital deficiency in Africa also. The 2 years of COVID aggravated this situation. Many of these countries, they face health crisis. economic slowdowns, and increased debt servicing expenditure. So from these aspects, once again, just as we touch based on the Asian challenges, we believe that if a sovereign rating agency comes into the picture with a nuanced approach, it could be helping that. Let's have a look in terms of the state of the global sovereign debt and the key facets of this. Some statistics, I'll not be getting too deeper into this, but the charts are there, which are clearly self-explanatory. We have seen over a period of time that the advanced economies as well as the emerging markets and the developing economies both have seen a sustained increase in the gross governmental debt. And on the other hand, we are also witnessing a slowdown in the global growth, which is likely to be slower as compared to the pre-pandemic period. So these are two important dimensions. On one hand, the debt is increasing. On the other hand, there potentially could be a slower growth across the economies. And this could potentially be leading to some challenging phase. This statistics, the chart on the left, indicates how the sovereign debt issuances across the economies, they have increased over a period of time. At the same time, the chart on the left or on the right is indicating that the developed economies, despite a higher governmental debt and overall indebtedness, they tend to have lower interest payment burden on them. So that makes it more challenging for the emerging economies. This is just not something which is there for few economies. Even the largest economy, the US, you can clearly see how the debt has been increasing. And interestingly, some of the key thresholds, like say the interest payments at a 20-odd percentage, which the US had witnessed in the 70s and like that, it's getting breached. And on the contrary, the debt which was there in the very challenging phase of that economy in the 60s and 70s, as compared to that, the debt has actually increased. So this puts them in a fairly challenging phase for the years to come. Not just limited over there, the Eurozone also is reflective of how the gross governmental debt has increased. If I were to take an example of UK, the interest payments, they are likely to increase on this. So across the economies, we are witnessing a challenge of spurring the growth. Potentially, it could be meaning higher debt, could be leading to higher interest burdens, a slowdown in the economy, and how to take care of that. And that would present the challenges for us working in the rating agencies as well. I just based on the IFSC ecosystem is developing fast. Let me just now turn to the sovereign risk assessment and how this gets integrated in an overall sense. We have 5 pillars of our assessment. Not surprisingly, economic structure and resilience, fiscal strength, external positions and linkages, monetary and financial stability, and a qualitative aspect in terms of the institutions and the quality of governance. I'm not going into the depth of that, but let me just point out some key facets. What we are trying to do, we are oriented towards ensuring that there is a greater transparency. Both the assessor and the assessee, they need to be transparent in terms of what parameters are getting into the assessment. We are going to apply this thing consistently through our local connect and regional presence. We believe that we could be in a better position to understand the nuances and communicate appropriately. And of course, wherever the solicited assignments are there from the governments, it could be providing a significant authenticity. Some key aspects I just like to highlight that for the first time, any rating agency has used, we have used this thing. We have used capex as an indicator for the future growth as a primary factor in the economic structure. We have given a very clear-cut primary driver in the form of sustainability, clearly identifying the need for that. We have evaluated the extent of domestic funding of the external debt. That means how much is external to a country and how much is internal to the country. That differentiation is important. We have tried to assess the ability to respond to the crisis, that means the black swan events for any economy. That's how the economies, they need to be differentiated, how they have demonstrated the resilience. The combination of all these aspects, we believe that as and when we are releasing our sovereign ratings, it could be an interesting dimension for the market participants to absorb. Something on the sustainability aspects now. India's track record has been fairly decent, I would put it. Despite being one of the fastest growing large economy, we have not turned our eye away from the sustainable principles and the importance of climate change associated to that. Whatever was a part of the 2015 declaration, we could achieve by 23, and then we revised the things aggressively upwards, including the net zero target by 2017. Under the visionary leadership of our Honorable Prime Minister, in his 2 terms, and now he is in the 3rd term, we have seen 109 gigawatts of renewable energy addition. This is substantial. And the kind of expenditure that India could be doing on the climate change, that in itself is very significant. The key aspects now on the ESG assessments in India, the regulator, capital market regulator, has enhanced the ESG disclosure norms by coming out with very comprehensive regulations surrounding this. We are one of the licensed ESG rating provider. The Reserve Bank of India has allowed the rooftop solar into the priority sector lending, which also we believe could be giving a lot of fillip. So as a rating agency, our focus shall be identification of the physical risk as well as the transition risk, meaning thereby that whatever the cost and the risk which is associated with the entities that are not transitioning in a timely manner, that needs to be assessed properly into the outcomes. As I mentioned to you, since we have a proprietary platform there for the assessment, significant coverage on this aspect, and we are in position to minutely assess the various ESG commitments of the companies and their actual performance on that. Our approach to ESG on all these 3 pillars, E, S, and G, transcends into 23 themes and 360 indicators. It's a comprehensive thing which gets into the final ESG score. And from industry to industry, these aspects could be differing. I would just say, let's say, for example, all the industries will not be having the application of these 23 themes and 360 indicators. It shall differ from industry to industry. A steel manufacturer, say for example, the higher weight could be assigned to the themes like carbon emissions, water management and usage, waste management, and biodiversity under the environmental factors. These factors could be changing for some other industry. So the weight for the E, S, and G pillars, as and when we have the final ESG score, could be changing basis the industry and the sub-industry categorization of any company. How these indicators they are used and how the analytical lenses are applied to that, sir. This factors in the globally accepted frameworks like GRI, TCFD, and of course, the Indian BRS are reporting. This is a scalable framework and can be used to assess the global companies as well, depending upon how the regulations in those economies would be. Apart from these indicators, we also use the analytical lenses by categorizing each of these indicators into these 4 analytical lenses: compliance, policy, performance, and the strategy and the plans. This helps us in understanding the disclosures in much more granular fashion and also helps in pinpointing to the issuers who are only taking the ESG reporting for compliance purpose, but who are weak on the performance parameters. So it's a comprehensive assessment which goes into all these aspects. So this is what I had to share, but in my summing up remarks, I'll just say that the dimensions of sustainable growth are a very interesting phenomena. As a responsible rating agency, we are fully geared up to assess these things and ultimately lead to analytical outcomes basis which the various stakeholders, be it the policymakers, with the investors, with the lenders, and the issuers themselves could be taking informed decisions in their respective domains, which ultimately could be paving the way for the sustainable growth across the economies. As I mentioned, because our assessments could be transcending across the geographies, we could be in a position to provide this kind of assessments in any geography where the stakeholders could be interested. Once again, so it is a privilege to have got this opportunity, and my heartfelt thanks to you, sir, and the embassy for providing such a platform to us. Thank you so much, sir, and over to you.
Mehulji, thank you so much for your very illuminating, very comprehensive presentation. I'm sure the audience also learned and benefited as much as we did in the embassy. Your first-hand experience and also the manner in which you scanned the comprehensive issues involved. It has been a very excellent presentation, and we all benefited a lot. To conclude, I think I will once again draw your attention to the very significant locational advantage of Ireland, which is not only a part of European Union, but also has extremely close ties with the North Atlantic countries like US and Canada. So, and also the Commonwealth countries like South Africa and Australia. So Ireland is and UK. So Ireland is a great hub for business. So I would really encourage you to look at Ireland from a bigger perspective, not just from the point of view of 5 million population. And any time you are coming to Europe, any side, then please do consider making a short visit to Ireland as well. And given your experience, expertise, I think you can be a good link in different B2B sectors. Also, also in due course, it will be great for you because you have great ambitions and also present already in many countries to have a small setup in Ireland as well. Because that will expand very significantly your connectivities.
Correct, sir. Also, in one of the discourses you had mentioned about the value-based integration and association between Ireland and India, right? I fully subscribe to that. And certainly, as and when we plan for any expansion in the ESMA jurisdiction, Ireland being a part of EU, right, could be one of the choices that we could be having, certainly, sir. Right.
Thank you. And once again, embassy is always delighted to be of any assistance, advice, facilitation to our business community friends. So please keep us in your mind, and also please spread the word that embassy in Dublin is very proactive, and also we are proactively seeking to help.
Absolutely, sir. I'll
Thank
keep
you.
that in mind
Thank
and
you.
rest assured.
Yeah.
Jai Hind, sir. Jai Hind.
Anything we can do, it will be with great pleasure. Thank
Right,
you.
sir.
Thanks a lot. All
Jai
the
Hind,
best
sir.
to you.
Yeah.
All the best to you and your team. Thank you.
Right. Jai Hind.